I'm Ari Redboard, and this is TRM Talks. I am Global Head of Policy at TRM Labs. At TRM, we provide blockchain intelligence software to support law enforcement investigations and to help financial institutions and cryptocurrency businesses mitigate financial crime risk within the emerging digital asset economy. Prior to joining TRM, I spent 15 years in the U.S. federal government, first as a prosecutor at the Department of Justice, and then as a Treasury Department official, where I worked to safeguard the financial system against terrorist financiers, weapons of mass destruction proliferators, drug kingpins, and other rogue actors. On TRM Talks, I sit down with business leaders, policymakers, investigators, and friends from across the crypto ecosystem who are working to build a safer financial system. On today's TRM Talks, I sit down with JP Morgan's Wee Kee Toh to talk about how the bank is working on digital assets. But first, inside the lab, where I share data-driven insights from our blockchain intelligence team. Between May 2024 and April 2025, reports of generative AI-enabled scams surged by an astonishing 456%, according to Chain Abuse Data, a platform maintained by TRM Labs. Just the prior year had already seen a 78% rise, driving home one critical truth. AI has become a force multiplier for fraudsters. At the core of this shift is the weaponization of generative tools, large language models, synthetic media, and deepfake technology to craft more compelling and believable scams. TRM has documented deepfake-based crypto scams featuring manipulated videos of figures like Elon Musk inviting victims to, quote, double your Bitcoin or claim fake giveaways. One instance alone appears to have netted scammers around $5 million in live stream fraud within minutes. But deepfake scams aren't confined to celebrities. Scammers now use live or coded deepfake calls to impersonate company executives, family members, or public figures. They deploy LLM-powered personas, chatbots, and fake help desks to build trust over time and guide victims towards fraudulent platforms. Criminals are even outsourcing much of this to AI as a service providers, paying to generate conversation scripts, phishing content, and fake identities. The threat landscape has evolved. Sophisticated fraud networks can now reach hundreds or thousands of targets simultaneously with minimal human oversight. Deepfake CEO impersonations, romance scams, and synthetic voice cloning have enabled criminals to escalate schemes across geography and scale. TRM observed these techniques being used even in financial grooming scams lasting months. Yet the same innovations deployed by scammers are now being harnessed defensively. Blockchain intelligence platforms like TRM Labs integrate AI-powered tools that trace illicit fund flows, detect suspicious smart contracts, flag emerging fraud typologies, and automate investigative workflows. With real-time anomaly detection and predictive risk analytics, investigators can dismantle AI-augmented scams faster. And now, I sit down with JP Morgan's Wee Kee Toh. Today, I am joined by Wee Kee Toh, the Global Head of Business Architecture at Kinexys Digital Payments at JP Morgan. Wee Kee, thank you for joining. Thank you for joining at this moment, and really excited for the conversation today.
Yeah, thanks, Ari.
Tell me how did you end up in this role at JP Morgan? You're a real early adopter expert in this space. So tell me a little bit about how you got to this point.
So I was actually involved in digital currencies almost 10 years ago. So it has actually been pretty long journey for me. I joined Kinexys Digital Payments about 3 over years ago. But maybe let's start at the beginning, because I think as we talk through the different parts of like blockchain, crypto, the evolution, in fact, I do feel like a large part of my work actually has a lot to do with the evolution within the industry as well. So like the move from experimentation to live production usage, it actually coincided with my own personal journey of moving from experimentation at the Monetary Authority of Singapore and then to doing live products at JP Morgan. So 10 years ago, I pretty much just dropped right into it, because when I joined Monetary Authority of Singapore, MAS as we usually call it, I was in the FinTech Innovation Group. I was in the Payments and Technology Department within the FTIG. So it was just one of those questions that came one day that someone was like, oh, this whole blockchain thing looks really interesting. Can you try to find out a little bit more about it? So I did a bit of digging. I think the first thing that I came across was actually IBM's open blockchain. So what eventually became Hyperledger Fabric, tried it out, did some simple applications, just tried to do and see how it works. And honestly, back then, I didn't really understood what the hype was about, what made it so special, but it was an interesting piece of software. And then I heard Joe Lubin. So there was this occasion where we actually had Joe Lubin talking about Ethereum, and he was actually explaining this concept of the world computer. And that's when things started to click. Like, that's when I was like, okay, this is a really interesting concept. This idea of a single computing platform where everyone can deploy their applications. We're able to do all sorts of different applications, deploy it on this public Ethereum, and all this application has this ability to interact with each other. That's when I was like, oh, this is actually really interesting. So we started getting a lot of hype around blockchain, crypto, but no one really knew what it was about, what they were even talking about. It was just a lot of all these buzzwords flying around. And we always believed that the best way is to actually learn through doing. So that's when we were like, okay, let's get together. Let's get some of these people who are really interested in the technology together, come together to explore it, to learn about it. And that's actually how we started on Project Ubin.
It's absolutely an amazing story. And, when I look around the world, when I got to TRM 5 years ago, I looked around the world and said, all right, who are the most important regulators and who've been doing this the longest? And obviously MAS in Singapore really, really has. And to be in the moment when MAS, as really one of the first regulators, was starting to do it, it's amazing. What were those lessons from Project Ubin going back to 2016 that you learned at the time? But then also, how have they been applicable as you've kind of built or thought about the space as it's grown?
So Project Ubin, we went through 5 phases of it. There were 6 reports that were published. I think the knowledge that was generated was probably one of those important contribution, important outcomes from the project itself. But personally, I do think that the most important outcome was actually the development of talent and ecosystem in Singapore. So a lot of times when people look at Project Ubin, they think about it as a CBDC project, as an MES project. But back when I was at MES, we actually referred to this as a payments project and an industry project. So it was primarily a payments project with digital payment tokens. But what happened was that the tokens are actually issued by the central bank. Hence, we refer to it as central bank issue or CBDC. But CBDC was never the initial objective of the project. It was really around payments. But we just happened to be the subject and we were issuing our tokens. So that made it a CBDC token. It was also an industry project. So this was around everyone coming together to learn about the technology, how to use it. Across the 5 phases, I think we have like hundreds of people who are involved in some way or another. So developing the talent and expertise in this new space, developing Singapore as a leading center for blockchain innovation, I think that was probably the most important outcome that came out of Project Ubin, much more than the knowledge that we generated.
It's really amazing because, like, when I think about that moment, right, you think about all that MAS has done since and how it's been really sort of a model for what other regulators globally. It's amazing to have been a part of that moment.
Yes, so it was really an amazing moment for me, myself as well. I think there was a whole people element to it, just working with all of the brightest people within the industry, at least in that space for that time. So some of the people I work with in JP Morgan today, they were involved in the project right at the start of it. Back then, those were the people working on Quorum, actually building a new blockchain protocol. So it was great because as part of Project Ubin, we actually had expertise, like leading expertise all around the world coming together to work on the project together.
I feel like your career has been really defined by this experimentation, especially from a regulatory standpoint, and now obviously more from a business financial institution standpoint. But tell me about your experience at the BIS Innovation Hub.
So maybe before I even go into BIS, I just wanted to bring out one more point, and that was kind of like the natural transition from Project Ubin into Project Dambat, which was the multi-CBDC project at BIS. So earlier I was talking around like development of ecosystem and talent being one of the biggest contribution or outcome from Project Ubin itself. So what happened then was that we started to see that we have developed a fairly big pool of talent, but we were actually continuing to tie them out in industry experimentation. So towards the end of phase 5 of Project Ubin, we actually decided to make probably the most difficult decision for the project, which was to conclude it. The view was that there's actually a cost to doing such POCs. It's not just the monetary cost of running a project, but really the focus and attention of industry participants as well. So Ubin, in a way, I think it was becoming too successful for its own good. We could probably have ran the project for another 5 years. Everyone would still participate, but at what cost to the industry? So that's when we decided to take this view that, hey, actually, we need to conclude Project Ubin, release the resources back into the industry, and that's how we can further generate even more growth within the sector itself. I actually remember the initial draft of the press release ending the project. We wrote the conclusion of Project Ubin marks the end of experimentation and the start of commercialization. It was really interesting because you know how press releases often go through many rounds of reviews in government. I was getting live updates on the review process itself because everyone who got the draft of the press release actually pinged or just called me when they saw it. So in a way, it was like writing an obituary for the project itself. And I had to go through 5 stages of grief with everyone in the review chain. You know, everyone who saw it was like, are you serious? Are you sure? Is this really what we are going to do? But it was actually tears of joy as well because right after we concluded the project, Patio was born shortly after. It was a joint venture by JP Morgan, DBS, and Temasek, with Standard Chartered, Deutsche Bank, and a number of others joining after. And the industry was also doing lots of interesting work in Singapore. So you had like JP Morgan building its what we call JPM coin back then, but what we know as Kinexys Digital Payments today. DBS built its DBS Digital Exchange. Lots of fintech startups was actually entering into Singapore, building all of these new products, new services. And that to me was really that whole big part of Project Ubin, the conclusion of it and what came out of it. So there was one part that came out, which was really from a commercialization perspective, banks building live products. And the other part was further experimentation, but not just in a single CBDC, but in a multi-CBDC context. So this was the part where you were asking me earlier around like BIS Innovation Hub, some of the projects that we did. So through Project Ubin, we proved that yes, it's possible to do multiple currencies on a single blockchain. We have the ability to do different type of transactions on it. Now we wanted to see, okay, what happens if we bring multiple central banks in and look at multiple central banks issuing CBDCs on a common platform? This was actually really interesting because one of the vendors that we used for this particular project was Patio itself. That was something I was really proud of, to see Patio getting involved in some of these other experimentation. And the really cool thing is that when we did the multi-CBDC project, the Patio product was used almost as it came out of the box. So we essentially swap out some of the banks and the currency names. Like we had in Patio, we have commercial banks doing commercial bank money. So you kind of have like JP Morgan for US dollar, DBS Bank for Sing dollar, all these different settlement banks and the settlement currencies. We just swap out the names. Like now you have MAS with Sing dollar CBDC. You have like Bank Negara with Ringgit CBDC. You have Australia with Aussie dollar CBDC. And everything worked out of the box. And to me, it was a validation of the idea that we had around this idea of multi-currency settlement. You can do it with commercial bank money, and we are doing it live today with Patio. You can also do it on an experimental basis with CBDCs. The underlying technology is actually very similar.
Fantastic. And it really does, like when you talk through all of this, it's like it's history, but it's really history that built the conversations that are happening now in exactly the work that you're doing. Specifically, your current work at JP Morgan with Kinexys is really still all about building that next generation of digital payments infrastructure, a lot of what you experimented with as a regulator. Talk me through a little bit about the most significant insights or lessons you've gained at Kinexys over the last few years of building and what that means to you.
So I would say, again, it's very much like the journey, how I moved from the MES to Kinexys. So if you think about it from two perspectives, I went from doing experiments to doing live project. And the other perspective is I went from a regulatory body to a regulated body. So the biggest difference is really from a planning horizon perspective. So when we think about public sector, generally we think in terms of like years and decades, but private sector, they act in weeks and months. But if you actually go in a little deeper, it's really not that different. So public sector focuses a lot more on the designing and planning, while private sector focuses on the execution. So the first big insight for me was really the need to like design for the future and even while we build for the present. So it was a bit of pulling together the two different perspectives to it, the public sector perspective and the private sector perspective. So designing for the future is very important to not create tech debt. So if we think too myopically, if we think only from a short-term perspective, we end up building systems that are very rigid, they don't scale well, and we end up with architecture and spaghetti connections very quickly. So I thought that was a useful learning for me, even when I'm in the private sector, which is really the idea of like, let's design for the longer term, even if we need to build immediately and very quickly. The research with MIT, so we've been doing a fair bit of research with MIT Digital Currency Initiative. I think it's a good example of how we try to avoid some of this short-term thinking. So a lot of times we are doing product development, but we also do academic research in parallel. So academic research, it forces us to take a more broader view of what an ideal product looks like without the confine of like resources and time. So even while we accelerate efforts of product development, building it very quickly, we don't lose track of the bigger picture. So that's really that one perspective of designing the future while building for the now.
It feels like there are a couple things that are specifically important when it comes to what you're building and honestly, and the experimenting that you did as a regulator, programmability, interoperability. How do you think about these types of things? And we've heard interoperability referred to as like the holy grail of digital payments. Talk to me a little bit about how you're thinking about these things as you're building and maybe even bringing in some of your experience from the sandboxes and the work that you were doing at MAS.
So I would say that programmability and composability is probably one of the biggest differentiator of blockchains today, something that was previously not possible or very difficult to achieve. So if you think about Kinexys Digital Payments today, we have a live blockchain-based payments platform. We do about $2 to $3 billion in transaction value every day. We allow our clients to do cross-border payments in different currencies in near real time and around the clock. So we allow payments to be faster with longer operating hours and more operating days. So some of this more better actually works well because they can have very intense, extensive impact. Like in the Middle East, for example, so they generally have their weekends on Fridays and Saturdays. So now they actually have an extra day to transact on Sunday. So that was a very extensive impact to them. But ultimately, this is really the usual thing about who is able to do it bigger, better, and faster. So traditional systems, they can also build incrementally to solve for this. So if you think in terms of like real-time payment system today, they already enable like faster real-time payments domestically. Once we start looking at connectivity of all these RTP system, you are going to enable that even for cross-border payments. So a lot of these capabilities that we build today in terms of making it faster, you can do it with traditional systems eventually as well. But programmability or programmable payments, I think, is a whole new different field altogether. It's a game changer. So with programmability, a client can then now deploy their logic into a bank.
That's fantastic. And one thing we often hear about is this idea of like, well, this technology is going to rip and replace this thing that existed before. But the reality is that they're all going to have to work together in some type of concert, whether you're talking about CBDC, whether you're talking about private stablecoins, whether you're talking about public blockchains, tokenized deposits. The ecosystem is going to have to work together seamlessly for this to work. How do you think of interoperability, which you hear about as like the holy grail of the space?
We use the word interoperability probably way too much without actually describing what we mean. So when we look at interoperability, there's actually multiple layers of it. So you can think about the application and the platform that is deployed on. So from an application perspective, I think when we think about interoperability, this is really around token standards. So how do we define token standards that you are able to reuse for all the different forms of payment tokens? So when you think about payment tokens, there's not just stable coins, there's also CBDCs, there's deposit tokens. There's a lot of commonalities with some differences between them. But are we able to define a common token standard that we can actually use for all of these different tokens? I think from an interoperability perspective, on the application layer, token standard is probably the most important. So today we are having this issue where we are having a lot of different blockchain platforms. I mean, you look at the news over the last 2 months, every week we probably have a new L1 or L2 coming up. So we expect that in the coming years, we're going to have a lot of all of these different blockchain platforms in the market itself. Now, the biggest value that we see out of blockchain is really this idea that all the different parties, you can issue tokens on a common network, they are able to interact directly with each other. So once we start having multiple of these blockchain platforms, how do we still enable that same old vision of like seamless connectivity, integration across all of these different smart contracts? I think that is the biggest question. And that probably needs to solve on a much more technological level. How do we enable blockchains to, I guess, communicate with each other in a way that still preserve composability, in a way that still preserve atomicity? I think that's probably going to be that biggest challenge in terms of interoperability on the platform level.
We talk about technology challenges, and there are certainly a lot. That's a huge one today. I am always been confident that technology, as it evolves, and it will continue to meet a lot of these challenges. There are also regulatory challenges and questions. I think it's very interesting. I would love your perspective, having worked at MAS in the really early years of shaping crypto regulation. The US recently passed the Genius Act, which is the first ever piece of legislation, really meaningful legislation at all in the crypto space in the US. What does Genius mean globally, and how are other regulators reacting to it?
I really love that you asked this question because I'm starting to see that there's a US view of how US dollar stablecoins are going to benefit the rest of the world, but there's also a rest of the world view of how US dollar stablecoins could potentially
Totally. And
impact
you
them.
have to understand both views. That is a great point. Yes.
Yes, yes. So this second part of it is not commonly discussed. So let's go a little bit deeper on that. So generally, when you think about stablecoins, they are more useful for international rather than domestic payments. If you think about international payments, it's usually your major trade currencies, and actually most of them already have stablecoin regulations today. But even from that perspective, 98 or 99% of stablecoins today continue to be in US dollar. So I think this is going to continue into the foreseeable future. Most of the stablecoins will be denominated in US dollar and issued out of the US. So what this is causing is this very interesting situation where you have US being a net issuer of stablecoins and the rest of the world being a net holder and user of stablecoins. And there's going to be this huge margin of difference between the two. So I don't think that the central banks and regulators outside of US are entirely comfortable with how this is playing out. There's starting to be more concerns around monetary sovereignty, currency substitution, other effects of dollarization. There's also the concern around like financial stability, especially if most of these stablecoins are issued out of their jurisdiction. So we are starting to see that already. For example, in Europe, there was some recent discussion around like risk of multi-issuance scheme. I think this is really good. This is really indication that central banks, regulators outside of US are getting more and more concerned about the effects of US dollar stablecoins.
I think it's really interesting. How do you think this all plays out?
Well, I think a lot of central banks and regulators are starting to look at how they can impose certain more safeguards or potentially even restrictions around the usage of stablecoins. So Europe already has that as part of their MiCA framework. Actually, if you think about it from that perspective, even both US and Europe have those provisions within their stablecoin regulation itself, where they looked at stablecoin issued out of the country versus in the country itself. And a lot of time there are restrictions around stablecoins that are issued out of the country. So I think more and more central banks are going to take a similar approach, which says that if you want to have your stablecoins circulating in my economy, you will need to either be subjected to some level of supervision or you have to comply with regulations within my jurisdiction. So I think there's going to be a lot more, I guess, regulation relating to the usage of stablecoins, not just on the issuance of stablecoin.
I think it's such an important perspective. What other challenges do you see out there that regulators should focus on as adoption, whether it's stable coins or more broadly tokenized deposits or digital assets more broadly, as they proliferate? What are some other challenges that are front and center for you for regulators?
I think one of the biggest topic being discussed a lot today is singleness of money. This is one part a regulatory question, but another part a general economic and commercial question as well. So if you think about just from an FX perspective, so when we talk about US dollar and euro exchange today, we generally think of exchanging US dollar and euro. You don't think about who's the underlying settlement bank. That comes in later as part of settlement itself. But if you are thinking from FX exchanges of stablecoins, now today you have some of the major stablecoins. You have like USDC, USDT, and PYUSD. And if you look at some of the crypto exchanges overseas, they sometimes even have different rates for the three US dollar stablecoin. Now, in a traditional financial construct, this should have never happened because you would think about it from a singleness of money perspective. If you have one US dollar with one bank, it should be the same as a US dollar with a different bank. But from now, when we think about stablecoins, because there are so many different stablecoins out there, you are actually essentially exchanging one specific stablecoin in one currency for another specific stablecoin in a different currency. So what this means is that there's going to be fragmentation of liquidity. I think FX using stablecoins is going to be really challenging, and we probably need to figure out if there are mechanisms of making this a lot more efficient and seamless, perhaps some ability to exchange between different stablecoins of the same currency, and how we could essentially enable singleness of money even with stablecoins. This will be very important questions that need to be worked out before stablecoins are able to gain much more usage, especially from a high value transaction perspective.
Let's build on that a little bit. One of the reasons I love talking to you, and I'm having so much fun in this conversation, is you are so energized and passionate and positive about the space. And it's probably because you saw those early days of innovation and now you've seen how much it's grown. What are you most excited about when you talk about sort of digital payments, innovation in financial services? Like, what are the things that get you most excited right now, either that you're working on or you're seeing other great people work on out there?
So the biggest benefit of blockchain is really the idea of integration, the idea that I could be having my US dollar deposit token, European bank could be having some euro deposit tokens, someone else could be acting as a market maker and then providing like a automated mechanism for exchanging of these two deposit tokens. So if you look from a more traditional payments perspective, generally you have one single entity doing all of these activities. But in a blockchain world, we are able to all deploy our smart contracts. The smart contracts can interact with each other. So from that perspective, we are all able to essentially integrate a lot better and more seamlessly with each other. And to me, that's really that big benefit of blockchains, because we are going to provide a much more integrated financial ecosystem. We are going to provide much better financial services to our clients. And that to me is really that big set of benefits around what blockchain brings to users.
It just struck me as we're sitting here, we are in this really interesting moment with what's happening in APAC, but also what's happening in the United States with Genius. Do you feel like we're in a moment that's almost sort of like a lot of the work that you've done to date is sort of culminating in this moment where you see, JP Morgan, you're sitting right at a financial institution as we see this really interesting institutional adoption, right? Do you feel like you're made for this moment or something along those lines?
I would say that I was at the right places at the right time. I mean, I was at MES when the whole interest in crypto first started. So I was right in the start of it. So there was a whole period of time where there was a lot of experiments. I was right in the middle of doing all of these experiments when there were all of these questions that needed to be answered. Working with the brightest, smartest people on answering questions, I think that was a good moment in time that I was at the right place. And then subsequently, once we start going from experimentation into live usage, again, I was at the right place again at JP Morgan. We're probably one of the largest banks that's big on this particular area. We build a live product. We are transacting close to $3 billion every day on our blockchain-based payment system. So I would say these are probably good examples of like really being at the right place at the right time.
It's extraordinary. Well, let me end on a personal note then. We've talked a lot about digital payments, but when you're not thinking about digital payments, the future of money, what do you do for fun? What inspires you outside of your work?
I actually love to read a lot, and I also love to travel a lot. So those are the things that I really do. And actually the background is quite interesting because most of the time you see people with a bookshelf,
Yeah.
all the books that they read. But actually, if you see behind me, those are most of my stuff for traveling, for camping. Those are the things that I love doing on the weekends.
Amazing. So tell me about camping. So you said you travel, but it's more than travel. You're camping often when you travel. What does that look like? Are you a glamper? Is this a fancy tent? Are you cowboy camping as they call it? What are you doing?
Actually, I do a mix of all of that. So I've done like very simple camping in just going out over the weekends. Fall is really nice for camping. So you just bring
Beautiful.
our tents, drive out to somewhere, and then camp somewhere and look at the fall colors. So that's that. I was in Patagonia end of last year. That was really nice. And then we did some of the more premium or glamping kind of camping, a mix of that together with the hut. So that was nice as well. And then a couple of years back, I did Annapurna circuit hiking in Nepal.
Oh,
So
wow.
that was hut to hut. Again, a different form of camping as well. You have nice because you have that nice four walls. You are always in a good place to sleep at the end of the day. But at the same time, facilities are a lot more basic. But that's what you expect when you are like 4,000 or 5,000 meters altitude. So yeah, all forms of different camping. I love them all.
I love it. Wee Kee, thank you so much for joining TRM Talks.
Yeah, thank you, Ari.
That was such a cool and really unique conversation. I mean, you talk about Wee Kee's journey from the very early days. We're talking pre-2016 MAS, where they're really just building what crypto policymaking can look like, and not in Singapore, really in the world. And then you talk about his experience at BIS, where they're doing sandboxes and experiment with digital payments and what the infrastructure should look like in CBDC. I mean, this is really early to be having these types of conversations. But then to take that decade-ish of expertise and take it to JP Morgan, which is really for years has been a real innovator in digital payments from a traditional financial institution. He mentioned JP Coin and now Kinexys. What a really extraordinary journey that takes him to this moment where we're seeing rapid accelerated adoption by traditional financial institutions. Really so many takeaways. And I think we got a little deeper than we do sometimes on some of the technology and some of the real importance of interoperability and programmability and what this technology means. So really grateful to have a conversation with someone who's been building in this space as a policymaker and now as a business leader for a long time. On the next TRM Talks, I sit down with Circle APAC lead Yam Ki Chan. If you love the show, leave a review wherever you're listening to it. And follow us on LinkedIn to get the latest news on crypto regulation, compliance, and investigations.
TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. This episode was produced in partnership with Voltage Productions. The music for this show was provided by Ecolix.
Now, let's get back to building.